Good morning, everybody, and welcome to the weekly analysis session beginning Monday, 25th of May 2015. I hope your sporting teams had a win on the weekend. Unfortunately, mine didn't. Going down to, who did we play? I've forgotten now. Hawthorn played, remind me everybody, who did Hawthorn play? What a supporter am I? Anyway, it doesn't matter. Hawthorn lost by 4 points to Sydney. Just in case some of you out there happen to barrack for Sydney. Anyway, let's digress. Let's get stuck into things. Weekly analysis session. First of all, our disclaimer, and the disclaimer basically states that the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So please, before making a decision based on the general advice in any of the Elite Wealth presentations, please consult your licensed advisor, whoever he or she may be, before acting upon any of the information contained herein. That's the disclaimer out of the way. Let's get into things. Again, the agenda for today, portfolio management. We're going to have a look and see whether our market risk conditions have changed, both here and in the US. Just a reiteration or a reconfirming of some of the amendments that we've made more recently. Looking at some specific setups both here and in the US as well, and some Q&A at the end. So let's go through and have a look at where we sit in terms of market risk at the moment. On Friday, hopefully all of you have had a chance to listen to Jeff and my macroeconomic analysis session there. We had a bit of a look at both the indices on Friday, and we're making comment that the ASX has come down fairly hard of recent. We are still in moderate risk at this point in time. Over in the US market there, we're still in low risk, and the market now performing or outperforming the Australian benchmark. You might remember from the beginning of the year, the Australian index put on around about 10%, and we've given about half of that back more recently in that pullback, and that pullback has resulted in that stochastic, our market risk indicator, if you like, moving below the 80 level and down, lying down now between 80 and 60. Alright, so what does that mean for our portfolios? Well, it means in the Australian market, because we are in a moderate risk market, that stochastic being below 80, between 80 and 60, it means that we use a 80% market risk multiplier. So as the example, if you were trading just solely the Australian market and your maximum drawdown in the Australian market was 15%, then you would be allowed to use 80% of that 15%, which would have you at a 12% value at risk level. Okay, so that's only if you're trading just purely the Australian market. This particular slide assumes that you're splitting your capital 50-50 between Australia and the US, and as a result we need to split that moderate risk proportioning, if you like, 50-50. So instead of 12% in Australia, that in effect does is it brings you down to 6% value at risk across your entire portfolio, that is Australia and US, 6% allocated to the Australian portion of that portfolio. In the US at the moment, as mentioned, the stochastic well above 80 at this point in time, so we use a 100% market risk multiplier. Now, in the example, if you were trading just solely the US market and your maximum allowable drawdown was 15%, then you are still allowed to have all of that 15%, i.e. 100% of it, exposed as value at risk across your portfolio. If you happen to be mixing your portfolio 50-50, weighting to Australian and US, then we basically just break that in half. So half of that allowable drawdown, that's 7.5%, you are allowed to risk all of that, 100% of it. So that's 7.5% value at risk across your portfolio for the US component. Alright, so what does that mean? For those of you who are wanting to scale out, choosing levels at which you are predetermining your exits, if you are doing that in the Australian market, then you are looking to scale out at targets of 2 to 1 because we are in moderate risk mode. In the US, your scale outs, if you are choosing to scale out, are at 3 to 1. So there's no change there. We're still in a low risk market over in the States. All right, let's go and have a look at some of our setups this week in both markets. I'll just bring in Beyond Charts here. Before we do so, let's just have a look at the market risk ratings here at the moment. We've got a lot of formulae written up here on our screen, so to get rid of this, just in case you don't know, we can compact the legend, and that makes all that writing disappear. So just again, another little tip in Beyond Charts if you haven't picked that one up. So in the US here, our benchmark index, the S&P 1500, you can quite clearly see that we've been in low risk territory for quite some time now. We've been low risk, but the market in the US really hasn't done a hell of a lot this year. It's been steady and staying above that the 80 on the stochastic, and hence in the low risk area. We're just starting to sort of break out of a bit of a range at the moment, but not terribly convincing at this point. It'd be nice to see some larger candles at the end of this. Again, we've got tails up both top and bottom, and very small real bodies on the candle. So at this point, not a lot of conviction in the market, but it's still holding up. Let's go through and have a look at the Australian market here. So I'll just wait for Beyond Charts to flick over. So from the beginning of the year, the Australian market actually performed very, very well. From around about this type of level towards the end of December to its highs, we put on 10%. Now, as mentioned before, we've given back about 5%. We were very much in a range, and we were being held up around about the 57.50 level before falling through about 10 days ago. Since then, prices come down to a previous level, which is coinciding with a longer term peak back in the sort of October region of last year. So we have found some support there. We've had a bit of a 3-bar reversal, and that price has come down. We've put in the pin bar. We've had a nice follow through subsequently. Friday was a little bit nondescript. It certainly would be nice to see us get back above this 57.50 level. If we can do that this week, then I think our market can gain a little bit of strength. You'll see that the stochastic has come down below 80. And we almost headed down below 60, which would have put us into high risk. Hopefully, if we get a little bit of follow through this week, that'll start to drag that stochastic back up. So, not forecasting what's going to happen, but we'll just have to wait and see. So again, just keep an eye on your portfolio value at risk. Not a lot happening in the commodities of late. One of the things, gold continues to sort of really just drift sideways at this point in time. One element that I think is worth taking note of is the dollar index. We had a very strong move in the dollar index, and as a result, over a period of time, the strength in the US dollar compared to a number of other currencies, etc., saw the Aussie dollar by comparison move from well above parity down to around about 76 at its lows. More recently, the dollar index has weakened, and as a result, over the last couple of weeks, we've seen the Aussie dollar go from about 76 odd cents up to around about 80, 81, a little bit above that. But just more recently, a little bit of strength coming back into the US dollar. And if you go and have a look at some of your commodities and things like that, you'll see that some of those have come off as a result of the strength of the US dollar. So just a little bit of a relationship there. We go and have a look at the Aussie dollar on the currency scene. This is on a weekly chart, and a few weeks ago I just pointed out this pin bar coming back in up to around about the 81 level, expecting a bit of a move downwards from that. The Aussie dollar, again, this is on a weekly basis, continue to show a little bit of strength, more probably as a result of the US dollar during that particular point of time showing a little bit of weakness. Since then, obviously the US dollar, as indicated by the dollar index we were looking at, showing a bit more strength, and on a weekly basis that's had an impact on our Aussie dollar. If we have a look at that on a chart on a daily basis, we might be able to see that a little bit higher. So the move back up here, this was what the pin bar was on the weekly basis. Price moving back up, we got up to around about 81.5, and recently we've had 5 or 6 days where prices come back down, and sitting around, we got down to pretty close to 78 cents. So a little bit of to and fro with the Aussie dollar at this point in time. All right, let's go and have a look at some of the setups for this week. Just running the the new scans both across the Australian market and the US market. The nice thing about it this weekend was that from the Australian market it selected or gave me 49 opportunities to have a closer look at, and in the US market it gave me 164 opportunities to have a look at. So that's certainly a number that's well down on the traditional loose scans for both those markets. So it's certainly saving me a lot of time going through and creating a shortlist and then shortlisting the shortlist. So it's certainly saving me a lot of time over the space of Saturday and Sunday afternoons. Alright, so the first market that we'll go and have a look at, we'll go and have a look at the Aussie market first. Number of opportunities here, and one of the things I'm always keeping in mind is the amount of risk that we're taking on each trade. Trying to keep that risk somewhere in the vicinity of 10%. Over the last 3 years, our average loss on trades is around about 10%. Some of the trade setups that you will come across, whilst they do exhibit really nice price action, sometimes the distance between where we're looking to get in and where our protective stops are can be on the high side. So that means that the distance, if you like, is starting to become quite large. And so by quite large, I'm talking about 13, 14, 15%, maybe even up to 20% on some occasions. So that just means that the stock's got to do that much more work to try and get to that sort of first 1-to-1 milestone that we look for, which should see us pretty close to getting to break even by the time we trail stop. So generally looking to try and keep it around that 10%. Certainly some of the ones that we'll have a look through today, you'll see that some are greater than 10%. Certainly you can, it's up to you whether you choose to look at those setups closer. For the purpose of the watch list, I'm going to try and contain it to around about that 10% sort of figure, give or take a couple of percent. So in the ASX last week on Friday, running the scan, I came up with a number of potential setups here. The first one being Perpetual, and again just reiterating what we're really looking at in our setups is really strong price action. So by strong price action, we're really looking for this last trough to be clearly at or above the second from last peak. There's the last peak, there's our second from last peak, so it's clearly above that. We've got a long-term peak over here back in sort of the beginning of 2014. The thing I like about this particular setup is that we've now passed that long-term peak, so that long-term peak being a major point of supply in the market, we've broken through there. Prices come back down, and that old long-term peak is now starting to also act as what was a major point of supply is now starting to act as a point of demand. We've got a bullish candle represented by the dot here, so our price action is ticking all the boxes. When scrolling out, are there any long-term peaks that we need to worry about? No, there's not. This one through here was just a medium-term peak, so if I zoom in on that one there to have a bit of a look, so we'll just zoom out a little bit. So that's a long-term peak all the way up there at $85. So where we are at the moment, we're certainly well clear of that. So we don't have any long-term peaks in the vicinity, only a medium-term peak. So from that point of view, we've got a lot of space to move up to that $85 level where the most recent long-term peak is, but that's a long way away. So plenty of opportunity for that one. That's Perpetual. So Perpetual PPT, non-stop order at 58.50 with a limit up to 59.08. Protective stops at 52.19. That's Perpetual. Next one on the list, IHK, iShares Hong Kong ETF. So those of you who are thinking a little bit outside the box and looking at other markets, not just the Australian and the US, would realise that there are actually quite a few markets out there at the moment that are performing very strongly. Some of the European markets are very, very strong, and some of the Asian markets are very strong as well. The Hong Kong market, probably as a reflection of the Chinese market as well, has really been on a tear of late, and that's represented in the fact that this ETF, which represents the Hong Kong market, a collection of shares basically, so it's a little bit like a managed fund which is traded on the Australian market. This particular ETF is putting in some strong performance. So price action here is really strong. So we've got the last trough is clearly at or above the second from last peak. Okay, so the price action is very, very good. If we scroll out, we're in blue sky as far as this ETF is concerned. In terms of risk to reward, this just sits a little over 10%, around about 10.6%. So we've got a nice bullish candle coming up on the scan as well. Good price action. So structure for this particular trade, 31.96 on stop, with a limit up to 32.27. Protective stops at $28.56. That's IHK. Next one in the Aussie market, RHC, Ramsay Health Care. This has been a terrific stock, and one of those stocks that your scan has found for you time and time again over the last 3 or 4 years. So again, the benefit of a relative strength comparative scan, just showing the merit of using a fairly wide trailing stop. An opportunity through, I'll just zoom back a little bit and just show you how the 3ATR has worked for Ramsay. It's worked very, very well. Even the fact that when prices come down, it's actually penetrated a 3ATR and closed above as well. Big black candle through here. Put on our value line and see how close we came. Value line there at 16.50. The close at 16.50 as well. So on that particular day there, depending whether you chose to get out of the trade or not, certainly over the prior to that, again, staying in a trade for a nice long period of time and racking up some longer term gains. Certainly there were some periods where stock went sideways, but we're not too worried about sideways movement as long as the stock is still outperforming the index. Then I think that's a good thing. So just on that point, how can you tell when your stock is still outperforming the index even though it might be going sideways? It's a question for you to have a little bit of a think about, and you can type in your answers as we go along. So that question was, how can we tell that our stock is still outperforming the index even though our stock might be going sideways? Something for you to think about. You've got the answers. You just need to have a think how to find that information. So that's Ramsay Health Care. We're pretty much in blue sky territory. We've just got to break through that most recent peak. So an on-stop order for Ramsay Health Care showing really nice price action with the last trough at or above the second from last peak. Ramsay Health Care on stop at $69.24. The limit up to $69.93. And protective stops at 60.86. That's Ramsay Health Care. Stop loss on that one there, you can see, is around about 12%. Yep, Kim's got the answer. Well done, Kim. So's David. So's Mark. Excellent. Well done. And so Steve. Won't tell you what the answer is just yet. We'll come back to it later on. TPM. TPG Telecom Limited was another setup. Again, good price action here. We're at all-time highs. Those of you who are a little bit concerned about round numbers, obviously we've got $10 in the vicinity there. So if you want to take notice of that, by all means you can. That's certainly not breaking your rules. From the purpose of the watch list, we're going to be ignoring the round numbers. The stop loss on this one is around about 13.4%. And you can see that with the retracement, we are getting closer down towards the 3ATR. That's okay. Showing a little bit more than a 10% risk on this one. But in terms of actual structure, again, it looks pretty good. So TPM, that's TPG Telecom, an on-stop order at $9.74 with a limit up to $9.83 and protective stops there at $8.43. That's TPM. Our next one, Transurban, TCL. I can see a few other guys absolutely right on the ball. So that's excellent that you've been thinking about what you've actually got as part of your Beyond Charts tools there, and the importance of, I may as well say it, the relative strength comparison. So if during a period of time, if your stock is going sideways, doesn't necessarily mean that it's underperforming. If you find that the relative strength comparison is still showing that your stock is outperforming the benchmark, then that typically means that whilst the stock is going sideways, that the benchmark is potentially either drifting sideways but slightly lower, or maybe the benchmark is heading down at a rate of knots, but your stock, because it's got good relative strength, is being held up. So I think on the basis of that, it certainly makes sense, because we're longer term investors, longer term traders. It makes sense to hang on to those particular stocks rather than trying to look for something that might be moving a little bit quicker. Certainly if you find that your stock is going sideways and the relative strength compared to the benchmark is starting to deteriorate, that might be an opportunity where you might choose to exercise your discretion and say, well, look, I've been in this trade for 8 weeks, it's going sideways, it's really not doing anything. In fact, now it's starting to underperform the index, and if there are better opportunities out there, then certainly use your discretion. If you want to jump out of a trade and into something else, then I think that's all fair and reasonable. TCL, Transurban. Again, price action very, very good on this one. The last trough coming in at well above our second from last peak. Price did rebound from this sort of $10.44 area pretty strongly, but conversely, no sooner did price retrace and we put in a fairly strong demand candle. And again, the following week, price actually gapping up and closing up for the week as well. So a good finish to the week for TCL. TCL, the risk on this trade is only about 8.2%, so fits in with our parameters nicely. So we have an on-stop order at 10.44 with a limit up to 10.54 and protective stops at $9.58. So that's all I had for the ASX. We'll come back and see whether anybody else has got any. We'll head over to the US now, and then we'll come back and have some Q&A where we'll have a look at some specific stock setups that you may have found. So over in the US this particular week, I found a number of opportunities there, around about 11 I thought, that were pretty good in terms of their price action. I actually did cut it down to around about 6 in the end, just using that sort of 10% sort of plus or minus a couple of percent for structure of trade setups. And again, use your discretion. You might choose to potentially put in a couple of trades in your portfolio that have slightly more risk on them, so perhaps out to 12, 15, etc. That's completely up to you. I don't have any problem with that, just for the purpose of the watch list, again trying to keep it around about that 10%. So the first one that appeared was CRI, Carter's Inc. This particular stock is certainly at all-time highs. It's been performing very, very strongly over recent times, showing obviously very clear relative strength. Had a big move a couple of weeks ago, and has only had a fairly shallow retracement given that particular move. We've just got to break through the last medium term peak there. So we have an on-stop order at 101.72. A protective stop all the way down at 94.20. So remember, in terms of setting our initial stops, we've got to be at least 0.5% below the last medium term trough and at least 2 ATRs away as well. So on stop order there at 101.72 with a limit there. I've got a limit there that is wrong. I've written down, oh no, sorry, on stop order 101.72 and on stop limit at 102.73. I was getting a bit cross-eyed there. So just to confirm, on stop order 101.72 with a limit to 102.73. $94.73. This will all be in the watch list. Protective stops at $94.20. Next one we're having a look at in the US, EFX. Again, similar in structure to the previous one. Nice strong candle a couple of weeks ago, moving up, forming a new medium-term peak. Shallow retracement, a move through last week which actually surpassed the last medium-term peak. So we've been asked about this a couple of times. How far past that last medium-term peak am I going to allow price to move before considering giving the trade away? And so we've basically said, look, if price has moved less than 1% above that last medium-term peak, then that's a reasonable distance and a reasonable rule that we can apply to all our trades as the key parameter that says, yes, we're within that 1%, so therefore I can consider it, or no, it's moved more than 1%. In this case, I'm going to let it go. So if we apply the 1% rule to this, then our entry, we don't enter at market on this last candle. We've still got to place an on-stop order above the highs of that last candle. The last candle there is the high is $100.78. So if we add 2 pips to that, we get $100.80. That $100.80 level is within 1% of our medium-term peak. So our medium-term peak there, the high is $100.21. So basically that just means that $100.80, where we'd be looking to get into the trade, is within 1% of that medium-term peak. Our protective stop needs to be at least 2 ATRs away and at least 0.5% below that last medium-term trough. And I have on this particular trade protective stops down at 94.33. And you'll see that protective stop level puts it just below these last medium-term peaks as well. So that's EFX on stop $100.80 with a limit on this particular one up to 101.21 and protective stops at 94.33. That's EFX. Next stock, FSL, Freescale Semiconductor Limited. Again, nice price action on this one in terms of where the trough is compared to the second from last peaks. Had a very strong run, having a bit of a retracement at this point, so a bit of a pause, looking like it's ready to break through our last medium-term peak. If we scroll out, again, this stock hasn't been around for a while. It's been around for about 4 years, but trading at all-time highs. Has had a really nice strong move upward, shallow pause, looks like it's ready to move again. The stop on this one represents around about 12.7%. So I'm still including it as an example of one that's sort of right on the verge there. Again, I don't have any problems with you considering this trade. For the purpose of the watch list, it won't be going in this week, but a nice setup in any case. So on stop order at $43.70 with a protective stop at $37.94. That's FSL. And if you're wanting to use a limit on that, then just a limit adding 1% to your on-stop order. Okay, so that will help avoid any potentially disastrous slippage by putting in that limit. That's FSL. Nice price action on that one. The next one coming through there, beyond charts a little bit slow this morning, is HBI, Hanes Brands. The protective stop on this one, you'll see again, it's on the verge. It's around about 13%, and you can see that price has moved up. We've put in a new trough, well above the second from last peak over here. But during that retracement, price has actually retraced pretty close to 3 ATRs. You can see this green line, which represents just a trailing 3 ATR stop, and it trails 3 ATRs behind the highest close. Okay, so if we don't get any higher closes, you'll see the highest close all through here is this candle at the top here, and as a result, since then we haven't had a higher close from that, and you'll notice that the ATR line goes flat. as a result. So price has primarily come back close to 3 ATRs. It's turning around, it's starting to move back up. Okay, so probably a couple of ways that you could trade this. Those of you who do like your aggressive entries, you could take this as an aggressive entry. That would give you a tighter stop. Remember, for the purpose of the watch list though, we're only going to be taking breakout trades, so that means I need to wait for the price to move back up above the last medium term peak. So if you're going to do that trade, waiting for it to pass the last medium term peak, your on stop order is at $34.82. Your protective stop is at $30.26. Alright, that's HBI, and again, if you're wanting it to place a limit order, just add 1% to your on stop order. HBI, the next one on the list, HZNP. A good looking trade here in the fact that it's moved up really strongly, gapped up and continued along the way, so showing really strong demand in the market for this stock. Its price has came back pretty quickly with 2 black candles, and at the same time, equally and opposite, it's put in almost exactly the opposite in white candles, pushing price back up towards the last medium term peak. Now the stop on this one, using our rules, outside of 2 ATRs and at least 0.5% below our most recent medium term trough, means that we're going to have a stop on this one of around about 15.5%. So it is getting out there a little bit. The structure of the trade looks very sound, really nice price action, retracement, strong candles, really looks like it just wants to go higher. It's just getting out there in terms of percentage risk, that's all. But if you're looking to trade that one, then $32.17 on stop, with a protective stop at $27.17. Alright, next one on the list, LAZ. Lazard Limited Class A. So price action here, last trough well above second from last peak. Excuse me. Where are we in terms of price? We're at all-time highs. So again, nothing above in terms of obvious levels of resistance or points of supply. So all we need to think about is passing this last medium term peak. So on this one here, your on stop order for LAZ is an on stop order at $57.22 with a limit to $57.79. Your protective stops at $51.86. That's LAZ. Next one, as we sit and wait for Beyond Charts to catch up, there we go. PKI, PerkinElmer. I'm not too sure what these guys do. Very similar to the previous setup in that we had an old, fairly significant point of supply previously. Price has now broken through that old point of supply, major point of supply here, i.e. a long-term peak. Price has moved through, it's come back, it's finding support, or it's finding demand at around those old levels where we have the longer term peak, and price is pushing up again. In this particular case, this last candle, the high is 53.67. The high of that particular candle there is 53.52. So another example of a stock that has just broken only marginally the last medium term peak. Now, by meaning marginally, it means it's still within 1% of that last medium term peak. So that fits our rules still. PerkinElmer, they make glue. I'm not too sure, they might, Kim. Hopefully if they do make glue that it doesn't just stick here, but it actually moves a bit further. So those of you who are wanting to trade this particular stock, 2 pips above the high of that last candle, the high there of that last candle, 53.67. So an on-stop order, 2 pips above that at 53.69 on PKI with a 53.69, that's right, 53.69 with a limit to 54.07. Protective stops down at $49.84. So again, outside of the 2 ATR, certainly within that 10% range as well, and Blue Sky above, so that's PKI. Next one in the US, STRZA, Stars Series A. Nice price action on this particular stock. Very strong movement of recent. You can see for a long period of time that this stock went sideways, and one thing that I look for in particular in stocks that are going sideways, when are they going to break out? So what I like to do using using this rectangular tool is just to enclose the price action and see if I can see any clues that might suggest that this stock is about to move out. So all I'm looking to do is encapsulate where can I see points of supply at around about the same levels, and where can I see points of demand coming in at the same levels as well. So we get this sideways movement, and what I'm really looking for is some indications that this thing might be ready to move out of the box, either on a downward side, and certainly over here it looked like it was going to move downwards. What was the clue through here that price looked like it could potentially move out to the downward side? What am I looking for in here that's suggesting maybe there's weakness might push this stock to the downward side? What is it that is evident through here that is suggesting there is the potential for this stock to move to the lower side? What am I looking at in terms of price action that is giving me a hint that maybe this might move to the downside? Well done, Scott, he's picked it up. Lower peaks. So we've got obviously points of supply, and as these points of supply progress, they're coming in at lower and lower levels. So through this area here, really seeing that. Why is that supply coming in at lower levels? Well, I don't really know, but I do know that there is certainly some demand down at these levels, and if that dissipates, if that disappears and the supply is still there, then price could well move to the bottom, out the bottom of the box. It didn't happen. We ended up with some demand coming in, some strong demand was found. So these old points of demand, they held, the market got excited about it again, pushed it back up. And what's the clue that this thing may well be ready to move out of the box? To the upside in this case. What's the clue that I'm looking for? Formation in this case of a higher trough, and we got the higher trough. Price moved out of the box very strongly. It's retraced since then, put in a higher medium-term trough, and price is ready to move again. So another example here of a stock that the last high there of our medium-term peak, 41.22. Last candle there, 41.50. So price has slightly moved past our last medium-term peak there. So if you're wanting to take this particular order on STRZA, you need to have your protective stops 2 pips above the high of the last candle. So your on-stop order would be at 41.52. That's 41.52. That price there is still within 1% of our last medium-term peak there at 41.22. Your protective stops down here outside of your 2 ATRs at 36.52, getting closer to our 3 ATR level, and that represents a risk of around about 12% on that particular trade. That's STRZA. Next one, RGA, Reinsurance Group of America. Price action, last trough at or above second from last peak. So it's showing nice strong price action. Where are we in terms of blue sky territory? We're at all-time highs on this particular stock. Those of you who are concerned about a round number, you've got $100 up there. Those of you who are not concerned with a round number, then you can just choose to ignore that. Again, this last candle has passed the last medium-term peak, but it does exhibit nice strong price action, with our last trough being at or above second from last peak. So the little red line there is where our protective stop is. So that's also just below that that second from last peak as well. That trough is clearly above our second from last peak, just in case there's any confusion there for you. The last candle, the high, 95.48, so an on-stop order of 95.50. Protective stops at 89.60 on this particular one, and in terms of targets up above, we're blue sky, so the sky is the limit. That's RGA, and that's one that will go in the watch list as well. Next one on the list, NXPI. Again, a nice solid setup here with price moving really strongly, gapping up and remaining strong. Price having a little bit of a retracement over the course of probably about a month or so, and just recently starting to put in some nice white candles. So again, thinking about what the broader US market has done over recent times, since the beginning of the year has been fairly flat. This particular stock showing, some nice price movement to the upside, pausing, and now looking like it's ready to move again. So entries on this one, 2 pips above our medium-term peaks, though that has us with an entry on this one, NXPI, of 108.52. Protective stops 0.5% below the most recent trough, so protective stops at 92.98. The risk on this trade is around about 14%, so it is getting up there. It won't go on the watch list on that basis, but if you like the price action, etc., and you're happy to have that slightly wider stop, then certainly no problems with you taking that particular trade. Next one on the list, CE, which is Celanese Core Series A. Not too sure what these guys do. Price action on this one looks really good, because we've had a really strong move upwards. So 2 very long candles there. Price has gone sideways a little bit. We've just had a little bit of a retracement, and you'll see the tails on these candles as well. Followed through with a more bullish candle last week, and again that's why we've got the little green dot above there. In terms of long-term peaks, well, there's a long-term peak back here in around about the middle of last year. Price has since come up through there, so we've already had our first test. We've had a nice shallow retracement, looking to move higher, onwards and upwards. The last candle there, again, the high of that particular candle, if I can get beyond charts to behave itself there, the high there, 68.41. So again, just choosing to enter a couple of pips above that at 68.43. That is still clearly within 1% of the medium-term peak high, and the high there 67.91. 67.91, so 0.5% added to that. The 68.43 is still within that level, so that's certainly okay to trade. Our protective stop, it needs to be at least 0.5% below the most recent trough, which it clearly is, and outside of 2 ATRs. So the structure of this particular trade, on stop at 68.43 with a limit to 68.58. Okay, 68.58, so that's a fairly small limit there, and it's a small limit because we're basing the limit off the high of our medium-term peak. So we're adding 1% to that. We're taking into account that price has already moved a little bit on this last candle. We're entering 2 pips above it. We're still within the 1% of our medium-term peak. So just to reiterate, on stop at 68.43 with a limit to 68.58, and protective stops at 62.47. I think that's all I had on the list in terms of trade structures. NXPI was another one there worth having a look at. It's got a 14% risk associated with this one, so that's why this one won't make the watch list cut. But certainly in terms of price action, looking very strong as well. So NXPI 108.52, protective stop at 92.98. I think that's all I had on the list. That was the last one. All right, so over to you guys. Let's have a look. All right, so Darren says I had LNG. Would have been better if last week's candle was around the other way. Okay, let's go and have a look at LNG. LNG. Look for natural gas. There we are. All right, let's just zoom in a little bit. Yeah, look, price just needs all we like to see on this one, it's shaping up actually pretty nicely. What would be nice to see this week is if price comes back and starts to move back up. That would certainly give us a pretty clear signal on our scan, given that it's still got good relative strength. At this stage, it is having a little bit of a pause, but if we can get some follow through action this week, then I'm fairly confident that this would, if we get a bullish candle, this will come up on the scan by the end of the week. So it's not looking too bad at this point in time. What else have we got there? AB. Okay, let's have a look at AB. That's from Kim in the US there. So what we'll do, let's put on our swing chart and have a look. Yeah, it looks pretty good. I think on this one, I think it may well have been, if I just scroll out, we do have a long-term peak over here. So that's a couple of years ago. So let's just put on our horizontal line there at around about the $35 level. So pretty close in terms of where we're going to get to on this trade in terms of risk to reward. Given that we've got that long-term peak there, I chose not to consider that because we haven't come up within 1% of that yet. So we haven't had our first test of that one. That's all. 10% risk on that one. Yep. So in terms of risk, that's fine. The only thing I was considering was that long-term peak. Apple, APPL. There we go. Yep. Okay. So whereabouts are we in terms of all-time highs? So certainly we're at all-time highs. No problems with that. The only reason this one's not in there, Mark, is just our price action at this point in time. So again, really just want to reinforce for the time being that we want to see these troughs, the last trough at or above second from last peak. So there's our last peak, there's our second last peak. So the price action is below that. Those of you who've been trading for a while certainly might consider this as a breakout trade. When we're considering this sort of setup, we're really almost getting into stagnation type of mode where we've got sort of almost even peaks and rising troughs, and certainly you can trade in stagnation mode providing that you have rising troughs. For the purpose of the watch list, I certainly wouldn't put this in purely because I'm wanting the price action to be the absolute best. That's the reason why I haven't put that one in. Microsoft, yes, Darren, I had a look at Microsoft. So let's have a look at MSFT. That was one that came up. And on this particular one, it's just, we've got a fair bit of work to do. We've got a long-term peak up here on Microsoft. You can see that I've done the analysis on it. And if I put on the value line there, the high there is 50.05. So I've got to come within 1% of that. So if I get out my calculator and drag old trusty, if I can get it to move onto the other side here, with a bit of luck. Here we go. There we go. So there's our calculator. Our high at 50.05. So 50.05. We've got to come within 1% of that. So multiply by 0.99. So we've got to come within $49.54. $49.54. Oh, all that gobbledygook up the top there. Let's zoom in a bit. So our high is 49.54. So it's right on the knocker in terms of coming within our 1%. Okay, so it does meet the bill there. The only problem is that, remember, we've still got this long-term peak, so it's still a major point of supply. So my entry order still needs to be above this level. My entry order still being above that particular level, it's still got a lot of work to do to get up to that particular level. So that was the reason why I didn't put that in. So I'd still like to see in this one here, I'm really thinking more about reasons not to get into a trade rather than trying to find reasons to get in. Certainly we've got in with the 1% at this point in time. That last candle there is not particularly bullish. Okay, so that's the reason why this one wouldn't have come up on the confirming candle scan. Right, so that was Microsoft there. Kim said didn't zoom. That's okay. Happens to everybody every now and then, Kim. Please comment on pending trades and stop outs from last week in the ASX. Okay, so last week we had, let me just go through to my watch lists. ASX weekly opens, I think, last week. So what have we got in here? We've got AHD, which is in the watch list, triggered on the 7th of May. So that one's in there. CZZ, as triggered, has had a little bit of weakness of late as well, remembering our initial stops, keeping those there until our trailing 3 ATR surpasses those initial stops. MNF, my net phone, triggered during the week of May the 11th. Again, last couple of weeks hasn't really done much at all. Your trailing stop is still way down here. Your initial stop still staying the same at 339. IMF. Okay, so here's an example here where we have our initial 2 ATR stop that we've applied to this one. It just got pipped in on this candle here. So the trade had been triggered. Price has since come down. Let's have a look at the close on that particular candle there. So this has been updated in the watch list. So our protective stop was at $1.15. Price came down, hit a low of $1.14. So remember, this is a soft stop. So our soft stop was triggered. So whenever we have a soft stop that is triggered, it means that we must take action and convert that soft stop to a hard stop. So in this particular case, the candle low was 114, so we convert that soft stop to a hard stop by putting a hard stop a couple of pips below the low of that low. So 114 now becomes $1.12 as a hard stop, and you can see last week that pin bar candle price came down, and as a result stopped us out on that particular trade. So that trade there is now a closed trade. So that's how a soft stop works. Our initial stops are all soft stops. Once the soft stop has been triggered, we must take action. Okay, so therefore we set a hard stop, and as a result, being stopped out early in the proceeds last week, being stopped out because we converted to a hard stop. Price during the latter part of the week, bit of demand coming back in, pushing it back up. That's the rules. Okay. So that's the one for IFM, and I think that's it from the last couple of weeks. Macquarie didn't trigger last week, so that's still a pending trade at this point in time. Mark had CI, which I think CI is already in the list from memory. So let's go back to our Securities Explorer. Yep, CI is already in the list, and that triggered during the course of last week as well. So that one's in the list. XL. Okay, let's put on our swing chart and have a bit of a look. Yep, this one in particular, Mark, the reason why this one didn't go on the watch list was because this last trough is not at or above second from last peak. That's all. So the price action filter on this one's prevented this one from going in the list. Having said that, though, certainly in terms of potential for this, look, it's in blue sky. No problems with that. We've just got to get past the last medium-term peak to structure up a trade. It didn't make the list purely on the basis of price action. That's all. And the other one was ENR. Was that in the US or in Australia, Mark? Let's have a look. US. Okay, thank you for that. So that's that one. Yeah, same thing here as well. You know, we've got this last trough, which is below the second from last peak. Certainly did put in a nice strong candle last week, so that's great. But just preferring to see nice strong price action where those troughs are clearly above the old points of supply. So every medium-term peak is a point of supply. It's not a major point of supply like a long-term peak is. But what we're wanting to see with the best price action possible is that, remember, these medium-term peaks, whilst they are points of supply, they're not paper thin. So it's very easy to draw a line on a chart and think, well, right, that's the point of supply. Points of supply are never that thin. They tend to be sort of zones. So on that basis, a little bit like a sponge, if you like. So what we're really wanting to see, wherever we see a medium-term peak formed, I'd like to see that, price, moves well past there, and on its retracement, retraces, and the retracement is above this zone of supply. So that's why at this point in time I'm really just wanting to put the emphasis on the strongest, neatest setups that we have that have risks of around about sort of 10%, give or take a couple of percent. Kim, just to confirm, the rule with a 3A ATR exit is if the weekly close is below the 3A ATR line, then you exit. Absolutely, that's right. So a rule, just to confirm for everybody, if we put on a 3A ATR, as an example, let's just go back and this will do. As an example, just hypothetically, this we happen to find an entry on this particular chart, ENR. We won't be too specific about the entry on this because we're more considered about the exit. The rule for trailing our stop, if we have an initial entry, and let's just hypothetically say that it's below there and our entry is above that level. Okay, so good price action in terms of last trough at or above second from last peak. We choose to enter a breakout trade. Here's my initial stop. The 3 ATR on the initial setup is way down here. Now as price starts to move up the following week, you'll see that our 3 ATR, we get a higher close, it starts to drag up as well. We get the breakout occurs and that drags the 3 ATR up as well again. So by the time we've entered the trade, been pinged into this trade, if not the first week, certainly on the second week, our 3 ATR line has come up pretty close to our initial stop. Now our initial stop stays there and it remains there until our trailing 3 ATR comes up and passes it. It comes up and passes it, and over a period of time it starts to flatten out. Okay, and as price starts to become a little bit volatile and really drifting sideways more than anything. Now remember, the other aspect of our rules as well is to put on our price volume volatility signal, which is that one there. So I'll pop Tim on. We don't have any price volume volatility signals on this particular chart, so we stay in along the way. Now our exit mode is simply when price closes below our 3 ATR. So on that particular example, we entered the trade at around about this level over here, and we exited on that particular trade down there. Now that profit and loss line, that needs to go down to the bottom there to the close, but once we've seen that price has closed below that 3 ATR, this is on a weekly basis, you see this on a Saturday morning, then market open on Monday, then we choose to exit. Okay, just keeping it nice and simple and doing it that particular way. Okay, what you've got to remember is the price has come back from its highs pretty close to 3 ATRs retracing, if you like, giving back that in terms of profit on the trade. So if it's doing that, it's really heading the wrong way for us. In a number of examples, if you've been in the trade for a while, it's likely that you've had some opportunity for profits with a price volume volatility signal coming up. In this particular example, price we didn't get a PVV exit on it, and our net result was pretty much around about that particular price there. So whilst we still got stopped out at this particular level, what our if I can blow that up a little bit just to show that we still ended up with around about, there we go, around about 9.9%. So we still got stopped out on the trade. We still made a profit. We were in there for a fair amount of time. Price retraced 3 ATRs and still gave us 10% profit. Okay, so again, we're in it for the longer term moves, and we're just trying to keep it simple. So hopefully that makes sense for everybody. Right, guys, we've gone nearly to the hour. Again, if any of you are interested in getting access to the shortened scan, so that all that does is it gives us a loose scan with the confirming candle at the end. So what that basically means is that we've had the medium term trough form. If you'd like access to that particular scan, give us a call. We'll do a TeamViewer session. We can just simply do a little bit of copying and pasting and get you up and running with that particular scan. The watch list should be out certainly a lot earlier today. I'm getting my head around the watch list and getting that done a lot more efficiently than the first couple of weeks. So thank you very much for your patience on that, and I'm hoping to have that certainly that watch list out by early afternoon at the latest. Good luck with your trading this week, and we'll catch up with you hopefully, if not on the education session, the macroeconomic session on Friday afternoons. Till then, good trading, and we'll catch up with you then. Bye for now.